Hi, everyone. How's everyone doing today? I want to welcome our viewers from investing.com. Just wanted to say hi. How's everyone doing today? There was some pretty interesting action happening here today. Okay, that's enough of me. As you can see in the end right here, we have one, we have two. You don't always have to have three, but US dollar yen trading in lockstep with S&Ps. You have one, you have two. Are we going to get a three? Um, I believe that it may have been enough up there, and we start taking out the end low. I've been sitting with this for a while, since last week. So in this business, when you sit for a week with a position that's not paying you, it feels like a quarter instead of a week. But nothing has really happened to change what I still believe is a narrative, which includes new lows and yields. Let's see what yields are doing with a little risk off today. Here's your 30-year. Okay, so it's trying to consolidate and hold. Could we get one more move to 220 before we trade under 190? 10-year, same scenario. Still think we're going to take out the 140 level. This could just be a little ABC, and maybe we're not even going to get a C. I would need closes at least back over 180 to say that yields have troughed and they're on their way back up. In fact, I believe once we have a low here, I've seen some wave counts that could take the 10-year above these highs after we make a new low. Some people think we're there already. But, let's do the right thing today and tomorrow takes care of itself. So to me, it looks like risk off is happening. If that's a scenario, there's still another push left in gold. It has a little wick here, unless we're just going to get a failure and the end's going to blast again, US dollar yen. Still is my contention that as long as yields are dropping, it's a conducive environment for gold, and that maybe we could even make a new high going into next month sometime. I know the commercials have huge short positions. Probably wouldn't bother them if they saw 16 and a quarter. $50 move to them is just business. Oil, if I'm right about risk off, I know a lot of people are saying, oh, I missed the oil, I missed it. If I'm right about risk off, we're going to take out these lows, we're going to flush them under this 49.30 level, 49 and a half level. Then I'll become interested if we can get one more low, because there'll be all kinds of glaring divergences setting up. So what I'm thinking is the next time it's right to buy oil at new lows, it's going to be right to cover the yen short and cover the S&P short. And basically, I'd still have conviction in the yen that eventually, then this would be during a risk off scenario and yields dropping to new lows, that I have a speed line and confluence with 61.8 down here, about 106 and a half. Okay, that's what I think is going on with oil. Shahab, if we get a correction in the S&Ps, oil will make a new low. Then after the correction's done in the S&Ps and we make another run, I think oil will go with it. Okay, yeah, this we know that governments want to understate things and not panic anybody. I heard there's, like 7 cases here in San Diego. They were probably all out singing karaoke and spitting on the mic, so I've taken a break. Anyway, uh, hope everyone's had a chance to become a subscriber and at least check it out for $1. Today, I'm offering refunds to anyone who's not happy in face. And I feel so generous that if you spend $1 here, for 10 days and you really don't think you got your money's worth, I will refund your dollar. I'll send it in an envelope, postage due, a crisp $1 bill that you can't buy anything with. What could you buy for a buck? You know what you could buy is a team like this. So we're all, when you come here for 10 days, you're paying us slave wages. We're in bondage to you. All our research, all our hard work. We're building the pyramid while you're the pharaoh just sitting back, watching your empire being built. You have a dashboard to navigate the markets with. Okay. So I'm sure most in here are familiar with what we offer. What's a weekly on? Okay, look at this trend line. So this looks like Blake's work to me. Okay, maybe we're going to check this out again down here. 108.20, 78.6. You know, we have Peter Goodburn on today, and he was bearish a dollar last time I had him on. It's going to be interesting to see how the pictures change for him. Also, guys, don't forget you could get reimbursed, or you could just get a rebate on your trading with these guys at Forest Park, okay? And you just go to that, click on Forest Park, and all the contact information is there for you, okay? Introducing Pepperstone, Think Markets, FX Pro, all of them. So, and you could always just Skype them and they'll answer you. So, postage due. Who would do that? Well, you know, I learned that trick from you, Ziggy. From my trading warrior brother, Ziggy. I learned you could mail things to people and not put a stamp on it. And then the mailman comes to your door. It's for 50 cents. 50 cents. What's happening, Blake? Is it Friday?
Hey, almost. We're
Okay.
almost there. Good morning.
Good morning, buddy.
So we have let me go ahead and I'll take over here and
Okay.
good morning, everyone. So the euro, we tried to rally back to the breakdown point and we failed overnight. So I have this really strong down channel, which is as long as it stays, there's no reason for the euro to go higher. It's going to continue to bleed lower. Remember, we're breaking down into well, let's see, how many years has it been? Because I want to say it is. Let's get over here.
Back to Macron.
Lows we haven't seen since 2017.
Yeah.
So basically,
gap.
I'm sorry.
It wants the Macron gap. I think it's around 107.5. You know, when he won and we gapped up, and that was the beginning of a pretty big bull move.
Yeah, you know, that's that looks possible. Right now, you can't be bullish the euro, not unless we get back well above 109. So it'd be like 109, maybe 20, somewhere up here. It's bearish. And I didn't leave in an order overnight. I was going to, and then I'm like, you know, there was all the news about the Hubei province came out overnight, and they enacted a new way of CAT scanning for coronavirus. And what had happened is the count came in irregularly high because of this new procedure. But that should be like the top. Like, we should see numbers start to improve starting tonight. We should, quote, I should say, quote unquote. So therefore, for me, I pulled orders, and I'm like, man, I should have put in that. I was going to put in an order to sell the euro at 90 last night, and then I said, I didn't want to do it, just because I didn't, you know, when I'm sleeping, I want to sleep. So, but we're in a, you know, obviously a pretty bearish trend now. The cable rallied pretty sharply, and we hit the 50% retracement, which there was the one of the chancellors had uh, resigned, and they brought in a new one. But the new chancellor is they're expecting a big stimulus package as a result. The cable spiked up, and so we've recovered quite nicely in the cable. Will the cable be able to hold on to these gains? We'll see by the end of the session. But just remember that the dollar has been pretty strong. I actually after the news out of China overnight, the Aussie came down and retested this trend line. And when I got up this morning, I'm like, you know what? I'm going to go ahead and get out of it here. Um, and I made a little bit, just kind of sitting in it, or I was sitting in it, and then I just closed it out and said, I'm done until I get a little bit more clarity with what's happening in with the coronavirus numbers anyway. So, but the Aussie still looks pretty constructive. I mean, you look at this, broken down trend line. We respected it. I could have just moved my stops up above, or below 67 cents and just sat in it, but there seems like a lot of uncertainty right now, and you can really see it in the dollar yen. The dollar yen, which um, failed again at the 110 level, and that's a little concerning because this was the big multi-year trend line, and we were trading above 110. I was thinking, man, here we go, we're going to be breaking out, and we had now reversed back down towards, well, 109.50 is key. As long as 109.50 holds, then you got to stay constructive. All right, but it's very whippy around here. So tonight, my assumption is going to be that tonight, if the numbers have improved, the dollar yen will bounce from these levels. If the numbers still look grim, the dollar yen might actually start to roll over, and then we might break that 109.50 level. So everybody's going to be watching the China numbers tonight. I think they're going to be very important. The China, coronavirus numbers. They should, like I said, they should improve markedly. We should see a definite improvement. And if we don't, well, you got to be a little careful because we are starting to see the stock market, show some signs of weakness up here. This is it's very early in the session, but we're, trying to develop some sort of dark cloud cover on the S&P. We are getting really close to that 3,400 level too in the market. So, again, this is where we have to start being very, very careful with what we do regarding equities, because I think if equities get below 30 30 33.30 again, and you see the dollar yen break below 109.50, that's going to be a bear sign. But if, as long as we can hold those, then we should continue higher. And I think what you have to watch tonight is obviously going to be the dollar yen. The dollar yen is going to be very, very important. But yeah, the euro continues to be very heavy here. I'm not doing anything with it. I think that the euro, just it's weak. I'd like to sell rallies, but we just aren't seeing any rallies. So, um, and if we can get back above 109, then we might get a little bit bigger squeeze. I don't know if that's going to happen today. The one thing that we did do here with the euro is we did make a false breakdown as of right now. So just be a little careful on the short side. Selling rallies back to 108.90. Maybe if we brush into new highs, that might be the better trade, just to be on the short side if you can get it up there. But that's an if. I'd like to see what the euro does here, because the euro has been extremely weak. I mean, the bottom fell out of it this morning, just before I got up. We were in this. Just as I woke up, we were in this free fall, and I'm like, man, holy cow! The bids can't even hold here. But like I said, we have possibly created a false breakdown here. Might get a little bit of steam back to the upside going into North American trade, but will it be able to sustain? I doubt it. If we can't take out this downtrend line, so that's probably the place where, if you guys are looking for shorts, that's going to be the place to look. in my opinion. One of the currencies that are really strong right now, which I'm surprised, is the U.S. dollar Swiss franc. We've seen a little bit of risk off, but the U.S. dollar Swiss franc continues to hold up really well. This currency pair, and I was referencing this for the last couple of days, that we're pushing up to the previous. This is a big multi-year broken trend line. You can see it right here. It's dotted. Big multi-year trend line, and it broke. Limited follow through. We're pushing up against the underside of it now, basically at the 98 cent level. So if for some reason the euro shows a reversal, like you start to see the euro trade well back above 109, this dollar Swiss might be set up for a failure up here. That's just something that I'm paying attention to because um, I'm not too keen on playing the euro, but buying the Swiss, especially in a period of risk off, that would be something that I'd be willing to do. So that means, I'd be looking to short the dollar Swiss on a failure up here, but I'd have to have the euro playing. I have to have the euro at least, firming up and looking like it's going to turn. But instead of playing the euro to the long side, probably what I would do is play the dollar Swiss to the short side. So I'm going to be keeping an eye on this here. It's you know relatively strong at the moment, but it would need some euro cooperation in order for it to show some reversal here. Um, but let's see. One of the things that I was watching this morning is I was watching the uh, the some of the reports in China, and man, they are on serious lockdown in a lot of different places. And I know we all want to believe that things are improving and things are getting better, but I am probably like you, a little skeptical just because of you know the the rate of how they're clamping down on the private sector. So it's going to be really interesting to see how the market responds here in the coming, in the coming weeks and months ahead, especially if there's any type of slowdown in global, well, especially global slowdown, but more importantly, like manufacturing slowdown in China. So I'm going to see if Stelios is here, and maybe he could shed a little bit more light on what's happened in the UK with the chancellor. Stelios, are you
Good
here?
morning. I am here. Good morning.
Good morning. So
Yes.
what happened this morning? Because the cable just ripped.
Yeah.
We were looking at it as I got up. Um, Amanda was like, "Hey, watch the cable here," and it started to sell off as we had the Javid had what did he do?
He resigned. Yeah.
He
Yeah.
resigned, and then
Yes.
all of a sudden the cable just turned around and ripped higher.
Yeah.
So what's going on with the cable this morning?
So Sajid Javid, the Chancellor of the Exchequer, so the Finance Minister. Remember, this guy had a banking background. Used to work at Deutsche Bank. Actually, my brother used to work relatively close to him for a while. But anyway, I don't know the rumors. Obviously, the reasons. Obviously, I'm not in the cabinet, but the rumors are that Boris Johnson, in the reshuffle, asked him to kind of get rid some of his associates. So he probably said no way and just resigned. So, I mean, again, this is just what I'm hearing. I'm obviously not in there to know. Now, the question is, the Chancellor of the Exchequer resigning should not be a good thing for the country, for the currency. And I was a little bit surprised when I saw the pound rallying. The most commonly offered explanation is that the whole impression is that Prime Minister Johnson is going to be more hands-on going forward, and there's going to be a tighter cooperation between number 10 and number 11 in Downing Street, so the PM's office and the Chancellor. So maybe the fact that Boris Johnson is going to basically get behind all this and call the shots, if you will, a little bit more. Maybe this is reducing uncertainty. I mean, I don't know. I would have thought that this news would be bearish for sterling, but it clearly isn't. And so that's what we know so far. The new chancellor has already been announced. I can't remember his name. Indian guy with a very good background, apparently. So the successor is definitely qualified. Let's see. Let's see what
Rishi
happens.
Sunak.
Rishi something. Yes, he's married to the daughter of a billionaire, apparently. So he's done well for himself. But yeah, I mean, that's all I know so far, and let's see how it goes. But as I said, my first reaction was, "Oh no, this is not going to be good for Sterling," and well, the opposite happened. So
Yeah, I mean, it ripped like crazy. One of the big sell-offs would be the euro pound, and the euro pound came and just got slammed down. Now the euro pound has come out of a well, this is out of a triangle. Let me go ahead and delete this so you can get a better view. So we came out of this triangle yesterday, and we had it tagged as pretty bearish in the Forex analytics analysis, but now we are probably well, we're around 127% extension of the last move up. We could obviously continue to fresh lows here, but it's going to be really interesting to see if we can find some support around here as well, because if you look at like from a harmonic standpoint, this could be a Gartley pattern if we can bounce here, which that's questionable based on what the cable is doing right now, but it's something that I know traders are going to be looking at as we come out of this bearish pennant. So anyway, so good recap. What else are you looking at this morning, Stelios?
Well, the main issue is, like you mentioned, the coronavirus update, and you were saying before, okay, a big jump in the number of cases reported now that they've been infected, and you think there might be a cap now and might theoretically slow down. Well, the problem we have is that these are numbers that we're given, so their numbers are whatever they want them to be. So I hope I'm wrong, but I still think it's very underreported. What I'm looking at and what I will be looking at is the next 2 or 3 weeks in cases outside of China. And see how those develop. So because remember, this has apparently an incubation period of like 3 or 4 weeks where there are no symptoms at all. So if we see cases multiplying outside of China, then we can kind of extrapolate to what's happening inside of China as well.
That's an extremely long incubation period, isn't it, Stel?
I'm not a biologist or something.
Yeah, I'm not
From
either.
what I've
but
read, yes, absolutely.
yeah, I mean, because you get the flu after being exposed. I don't think it takes a month for symptoms to arise.
No.
I mean, look at
right.
everyone's household, right? I mean, it didn't take a month to spread it in your house.
Yeah, absolutely.
So
very good point.
Yeah, the counter argument to that is that HIV is also a virus, and you know very well that until you actually develop symptoms for that might be years. So that doesn't necessarily mean something.
Okay. Well, I mean, it would make it easier to spread. I mean, HIV
of course.
spread differently because people aren't sick and they can be, everywhere for a whole month.
Of course.
And not be asymptomatic. So the
it would
longer
be much
they're
better
a time
if you had
bomb,
immediate manifestation of the symptoms, because
they're 1 month time bomb walking around the world.
Right.
Yes, exactly.
Anyway.
And there were cases that actually they let them go as tested to be
right
okay,
here in San Diego.
And then it proved that that wasn't the case.
Yeah.
Well, it sounds like Steve is here. Good morning, Steve.
Good morning, Blake.
Unless that was
today
impersonator.
Today I tried your waking hours.
How did that work out for you?
Magnificently.
I'm
thinking of making it, my
you
standard.
You're moving out here so you could get up at 4?
Yeah. Looking
Right.
forward to it.
Well, hey, real quick before I let you guys go and take over, I have to point out, man, this cryptocurrency move has been pretty massive. I know
Ethereum especially.
What's that? Yeah, Ethereum.
Ethereum has gone vertical.
Yep. We've been bullish on Forex Analytics on, the basic technical analysis for like several weeks now. And man, Ethereum has just gone absolutely bonkers.
Wow.
Yeah, I mean, we're pushing the 618. I don't know if I'd really want to be long up here. If you guys are trading the cryptocurrencies on the long side, you probably got to be a little bit more cautious at this point. But yeah, it's been a massive move. So anyway,
Yeah, you bought the bottom on PIP, pattern and play.
Yeah. We were, playing it on the long side way down there, but man, this has been a really big acceleration. So, for those of you guys that are trading the cryptocurrencies, the altcoins are really outperforming Bitcoin, which is interesting. There's
Wow.
a lot of institutional money that's been, that's in these altcoins. So just, a lot of people speculate. There's an article in Bloomberg. You should read it if you can find it. Just how much institutional money is in, and they're propping these prices up to try to get out at these levels. So yeah,
it's interesting.
Mark Yusko is doing a pump and dump.
It's interesting because Bitcoin is gold and the alts are like silver. Whenever the alts are outperforming, the whole market's going up.
Indeed.
Yeah, so it's interesting, and Bitcoin is stalling up here. So anyway, I'm going to pass it over to you guys. Good luck today for the CPI, and like Dale said, if you haven't tried us out, make sure you try us out. It's only $1 for 10 days.
That I'll refund.
And he'll refund.
So zero downside.
All right, guys, have a great one, and thank you all.
Blake.
You too.
Thank you, mate.
Good luck today,
Thank you, Blake.
Hey guys, there is a song about Ethereum that was written, I don't know, in the 60s, I think.
Really?
When the moon is in the 7th house and Mercury collides with Mars, then peace will guide the planets and love. This
is the music coming from some kind of a church, or you make it sound like that?
Age of Ethereum.
It's like a prayer.
Age of Ethereum.
Yeah.
He remembers it. All right.
Okay. So we have US CPI coming in about 2 minutes. Probably worth mentioning before that, the only really noticeable number.
We also have initial jobless claims still. Yeah?
Yeah, but that's not going to move the needle at all, is it?
Yeah, unless it's like a huge outlier. Yes, it's not going to move.
So we had the RICS house price balance. This is out of the UK.
Swedish.
This is like not RICS, RICS, so house price index from the UK, which is kind of done from surveyors that report actual rise in prices or fall in prices in their areas. And this is a percentage. So 0 means nothing has moved. 5% means 5% of the houses have moved. Minus 5%, 5% have dropped. Expected roughly flat, came in at 17%. So it was a big jump. I don't know what gave rise to that. I mean, seasonality or something. But
17%.
that was big. I mean, even it's a volatile number, but this is like the biggest print in over nearly 3 years. Anyway, 2 years.
Okay, interesting.
Yes. It's a number I usually look at because it it shows the sentiment and movement of house prices, which we know the UK is heavily dependent on. I remember.
I think every national economy has been built around housing. I mean, that Canada, that's what they're worried about as well.
Yeah.
No one's worried about it here in Southern California. It only goes up. But yeah,
UK, we all know it can only go up how it usually ends up.
Yeah. What could you buy a decent house for in Athens?
Greeks actually believe the same thing about real estate prices. Yeah, because for decades, for decades they would only go higher, and worst case scenario they would plateau, for a period, and then go higher again, and then they realize that there is nothing that can't go down.
Yeah, we had a 50% hit basically on average.
Have they come back to where they were?
Very slowly, but not to where they were now.
Okay,
but they are rebounding slowly. Yes,
because in the U.S. a lot of markets have surpassed the housing crisis.
Okay, numbers.
There we go.
Let's
2.5 initial jobless claims.
Core CPI in line. CPI
and the year-on-year CPI, the year-on-year CPI actually still is higher.
Is 0.1
we're now
higher,
at 2.5%.
Yeah, although it's core PCE that they're looking at really, which is at 1.6. That's
they will keep looking at whatever.
Whatever suits them.
Fits better. Initial jobless claims more or less as expected. Continued jobless claims more or less as expected, a little bit better. So I doubt that any of this data, can actually move the market significantly.
Just want to note we have the Bank of Mexico interest rate decision later today, and I think the consensus is that they're going to cut 25. They're still at 7.25%, I think so. The Mexican peso still has good carry.
Which for today's standard, it's like
huge,
huge. Back, couple of decades back, it wasn't really nothing to.
Absolutely.
But regardless, the USD MXN, nothing has really changed in the outlook here. I mean, we did break down from a multi-year symmetrical triangle, and to be fair, any attempt of a rebound here has failed. So personally, no matter what they do, I don't really see much of a bullish scenario here. We do have some RSI divergence, and of course we can, end up getting some kind of rebound. But in order for the outlook to change from, bearish to something else, we will need to do a lot more. Stelio, anything else that has happened or we're expecting to happen within the next 24 hours?
No, that's it. That's it for now.
Okay. Thanks, mate.
Thanks, man.
Our friend here is asking.
I think Trump wanted to pardon Charles Manson, but they found out he passed away already.
How to trade on news events? Answer: don't.
That's news to me, man.
As a general rule, very few people can successfully trade news events, so don't. And there are two things you can do about trading news events. One of them, three things actually. One of them is trying to predict what's going to happen, which, needless to say, it's like gambling, right? So next one is acting immediately after you get the news, which doesn't make much sense because you will never get the news faster or as fast as institutional investors do. And the third alternative, which is the only somewhat viable alternative, is reacting on occasion to the initial market reaction. Some people can successfully do that, but as a general rule, the vast majority of people can't actually successfully trade news events. So I would suggest you don't try to. Let's see. Questions. Good morning. Good morning to you, Monica. Bear flag in yields. Let's have a fast look at the yields, and then I have a few things I want to show. So now, bear flag. One likely interpretation. There's a second one. This might be a little triangle here. It doesn't really matter which of the two, because in any case, I would agree that a resumption lower seems the likelier scenario in this case. Here's the 10-year and here's the 30-year. As you see, same type of formation in both cases. And if we want to have a look at the bunds, also a triangle here. Of course, the yields of the bunds is, should be inverted. But as you see, same deal here. So bunds also forming a triangle which should break higher. So bund yields are obviously also forming a triangle which should break to the downside. So continuation formations most likely in all cases. So I'm 100% with you. Thoughts on USD CAD? Yes, actually I did write about that the day before yesterday on the chat room, because there you see. because we had drawn this formation since a long time ago, and I had in essence pinpointed this as a huge pivot level for the market. My actual assessment, which I had also said in the webinar, was that an initial rejection from there is likely, since we've had quite a strong move from 129.60 all the way to above 133. But I would expect that an eventual resumption higher and breaking through that confluence of resistances is a likely scenario, in which case we would expect a lot more strength. And so far it's playing out nicely. So far we're getting an initial rejection from that trend line resistance, but that might just be a breather. I mean, the pair needed to work out overbought conditions. So I would definitely not write it off, because it seems to me like an eventual break higher is quite a likely scenario. Okay, obviously I'm not advocating that you should be buying the USD CAD close to resistance, but what I'm saying is that if it spends a little bit of time consolidating here and working out the overbought conditions, then you can feel a lot better, because it's going to be a lot easier buying a breakout to the upside. So buying a breakout above 133, like 25, whatever it is. So that's what I think about the USD CAD. So, if you sold resistance, great. I mean, you now have a risk-free trade. If you want to be long, you either wait for a deeper retracement, if that happens, for example, a move towards 131.50, in which case it makes sense to try to buy it, or you buy the breakout above 133.25. Okay, so that's how I think somebody should play it. How to trade the pound? Okay, since you don't mention a specific pound pair, I'm assuming you're talking about the cable, the pound against the dollar. So first of all, I want to see what the cable is going to do today, because it's back testing this broken triangle. Now, as I've said multiple times on this webinar, I'm looking for the cable to continue higher. Although when we broke through this triangle to the downside, I was looking forward to more downside, which it can still happen. I mean, if we get rejected today from current levels, we might just be backtesting this triangle support as a resistance, and we might continue lower. Ideally, I would want to see a move towards 127.50, 127, in which case I think it's quite likely to see some buying interest and then a move towards new highs. So let's see what happens today. If we get rejected from here, I think we can see a continuation towards 127.50. If on the other hand, we just move higher from here, I mean, theoretically speaking, we've already satisfied the minimum requirement, which would be a lower low. We incrementally got one, not ideal for sure. I would still be looking to buy the cable. Now, under which circumstances, if that's the case, on a breakout from that trend line resistance. Okay, so my medium-term thesis remains that I'm bullish, but I'm not yet convinced that somebody should be buying today, right here, right now. I would rather buy a little bit lower, or if that doesn't ever happen, buy the breakout. What do you think about the Guppy is the next question, which is obviously quite correlated to this. Oppositely from the pound, the Guppy, and I talked about it also, I think, the day before yesterday, it was likely forming a triangle here. And, obviously it's, it would eventually break out. I mean, the range had contracted too much for this to be actually, viable to stay within it for much longer. We seem to be attempting to break above it today. Of course, I would definitely wait at least, to see how the daily candle closes, and ideally see a move above 144.50. And if that happens, I think we can end up seeing one more leg to the upside before we can consider anything else. I mean, definitely this rebound that started back here in August, is not invalidated yet. I mean, we haven't produced a lower high so far, or a lower low for that matter. So it might continue higher from here. As I said, let's see if we're actually going to close above the triangle today. That's going to be a first step. Isn't all this liquidity, repo, low interest rates, etc., going to lead to high inflation? Asks Dillian. If yes, what are the options for the Fed? First of all, you probably mean price increases, because inflation is the expansion of money supply. So inflation we already have. Now price increases, so the second definition, let's say, of inflation, we already have as well. But so far, it hasn't spilled that much to everyday prices. Of course, it has spilled a lot more than they want to report. There's no question about it. I mean, inflation is not 2%. There's no question about it. Whoever has been doing like shopping, grocery shopping, or whatever, for a family, you obviously can easily testify to the fact that inflation is not running at or below 2%. Now, why is inflation not a lot higher in everyday prices? Is because so far inflation has been mostly contained in asset prices. So stocks, bonds, real estate, you name it. Now, do I think that this is eventually going to spill over to to the rest of the prices as well? I think it's extremely likely, because we've already seen a pickup in inflation slowly, and despite manipulation in the CPI, I do think that it will climb higher despite that. So yeah, I do think that inflation is going to become more of an issue in the years ahead. Central banks are all opening up again the money supply springs, and I do think that especially once we get a devaluation of the dollar, the US is going to have a very decent problem with inflation. 17 days is the longest reported incubation. No, I don't think so, Gautam. I've read about 24 days in some cases. Now, of course, I can't confirm what I'm reading, but I've read it in supposedly like reliable sources. Now, is that right or wrong? I can't testify to that. I'm not a virologist, obviously. Can you evaluate USD? Yeah, absolutely. I mean, the USD against the Singaporean dollar had a major break higher some time ago, and it has literally gone vertical. You can see it here. It has literally gone vertical. Now, I assumed that that horizontal resistance area is going to produce some type of a reaction, and it did. I mean, RSI was approaching, daily RSI was approaching 90. Now, do I think it's going to pull back all the way down to 137? It might, but it might, produce a much shallower rebound. In any case, I think an eventual breakout from 139.50 is going to be a very, very bullish development. So, I'm not advocating that you should be buying here, near resistance after such a huge move higher, but you can definitely attempt to buy either a deeper pullback or a break above 139.50 if hopefully the pair has spent some time working out overbought conditions. Because if it goes straight from here to above 139.50, I understand that it's not easy for somebody to be persuaded to buy something that has already moved that much with a daily RSI that, despite this little pullback, it's still above 80. So I understand that. In that case, if it just moves very fast above 139.50, then your second best alternative in that case is to wait for that breakout and then wait for a pullback to retest that area as support, and that is going to then be a buying opportunity. So those are the two options of how you can actually play that. What about Guppy? We covered that. Crude, gold, silver, SPX, Nasdaq. Yeah, sure. Let's have a look at all of those. So let's start from crude. There it is. So crude. Some stabilization, obviously, after like a big move lower, but nothing has really changed because so far this move just looks like you know, the market trying to work out, very oversold conditions. So as long as we stay below 54.50 roughly, I think that crude should remain a sell, as simple as that. This might likely be a triangle or might be a bull flag, something like this. Okay. And I think that it is likely that crude is going to resume lower after a couple of days or a little bit more, but in any case, as I said, as long as we stay below 54.50, I wouldn't change my bias. Now, having to do with gold and silver, nothing has really changed here as well. I've kept saying again and again that what I'm seeing on both charts is bullish consolidations. And that's what I see, bullish consolidations. I mean, this looks like a triangle to me. This looks like another triangle, different type of triangle. The other one was a symmetrical triangle. This one is a descending one. In any case, you can clearly see the trend line resistances. I think that a move above those trend line resistances is going to indicate that the next leg higher has begun for gold and silver. And I consider it extremely, extremely likely. I mean, I give it like a 70% chance to see a continuation higher sooner rather than later. Another pair that is actually also consolidating is palladium. I didn't expect that to be very, very likely. I thought that we would initially see a deeper pullback. Anyhow, I did manage to capitalize on this move lower in palladium. Now that we have more of the price action, it seems that palladium is building a triangle here, which would also indicate that the main scenario is that we're going to have one last move to the upside before we actually can then produce a much deeper correction lower. So as long as it's consolidating above 2,250, I would favor an eventual breakout higher and one last move to the upside, which I would be actively looking to sell once again. Copper also in recovery mode, by the way. You can see it here, but I don't see anything in this move that indicates that this is anything else than just a rebound from an oversold asset that was testing multi-year lows, which was exactly the case. And speaking of which, I just remembered that somebody asked earlier two things, and I only answered one. The second one was actually what's happening with the Aussie against the USD. And now that we're mentioning copper, the Aussie against the USD is also showing some signs of stabilization, exactly as in the case of copper. It was testing multi-year lows. Now, in order for me to be convinced that this is anything more than a corrective consolidation, I need to see more, a lot more from the pair. So, the first hurdle to clear would be a daily close above 67.50. That would be like the first sign that I would want to see from this market. But even when that happens, it's not enough of a sign to try to fade this market that has been in a prolonged downtrend. I mean, we've been moving since January 2018 lower, sometimes slower, sometimes faster, but we've been moving lower for more than 2 consecutive years, right? So 67.50, first area of resistance, second area of resistance here where I'm showing with my mouse, which is also an area that has an unfilled gap. That unfilled gap specifically is roughly at 68.20. So that would be the second area I would be looking for as resistance if this attempt of a rebound actually unfolds further from here. Aussie USD, yeah, just covered that. Platinum, sure. Let's have a look at platinum. Platinum. Here it is. Yeah, but opened it on the wrong. There it is. So platinum. Now, two possible interpretations here with platinum. Doesn't really matter which you choose, because in any case you have a very nice risk reward ratio one way or another, which means if you like it to the upside from here, which is a likely scenario, a very likely scenario, given the fact that also gold and silver are showing signs of a consolidation before breaking higher, you have an excellent risk reward ratio. You can be long here against like 950. So risking roughly, let's say, $20 of downside to see a move, towards 1,050, which would be like $80 of upside, right? So a very, very healthy risk reward ratio. Now, on the other hand, if you believe that this is a head and shoulders formation, which it might be, but don't forget it can also be like a triangle, then you will just remain patient and you can short a daily close below 950 and then expecting for this to unfold, lower towards the 200 daily moving average at least. So, you like metals to the upside from here, you buy it where we are, you risk $20 of downside, looking to make 4 times that likely. You like it to the downside, you wait for a daily close below 950 and you sell that and you place your stop loss above this right shoulder and can then extrapolate the target based on the height of this formation and see where it leads. I'm assuming it's going to be pointing at somewhere here in the vicinity of this previous support resistance area at 870 roughly. So still a very healthy risk reward ratio in that case as well. Okay, question about the Kiwi, and then we had the questions about S&P and the Nasdaq, which I'm going to cover as well. So the Kiwi, here it is. So the Kiwi had a nice rebound yesterday, but it hasn't really invalidated anything in the sense that we're still capped by the 200 daily moving average, which is a little bit higher. As you can see, it's that blue trend line. We also might be within a descending channel. We haven't broken above it. And we have definitely broken below this blue ascending channel, which was likely corrective. Bottom line, I have no reason to believe that the Kiwi shouldn't be sold on any decent rally. I think that, until proven otherwise, that's the market direction you should be in. Now we have a question about the USD NOK, which I would mention anyhow, because I do think that the USD NOK is interesting. It's actually playing ball very nicely. That's what I expected several days ago, and I haven't changed my drawing here. I expected that this resistance area, if we broke above 917, would be strong enough to, to produce some type of a pullback. So far, we've seen a little pullback, more of a consolidation here. Keep the big picture in mind. The big picture is that we're trading within this ascending channel since the very first days of 2018, so 2 years, which means that, any stabilization, so either we decide to produce some type of a consolidation here, then I would expect a resumption to the upside for a move towards 950, or a little bit of a deeper pullback towards 906. That might also be a buying opportunity. And I would expect likely one more high before looking lower. Although, as I said some time ago, I do prefer, and the previous time I traded them, I actually traded both to the short side. I do prefer EuroNOK to the downside. We mentioned that several days ago, and if you see, EuroNOK got rejected from a very significant trend line resistance. You can see it there. That's what we drew several days ago, that that's a pivot for the market, and might get rejected once again, but if it breaks above it, that's going to be like a bullish development. We got rejected once again. Just look at the big picture here. This is a multi-year ascending wedge, right? So we now reached soft support. I would be a little bit cautious here, but I have to tell you that as long as EuroNOK keeps getting rejected from that trend line resistance, I keep strongly believing that sooner rather than later, this massive formation is going to break to the downside. And when that happens, that's going to be a massive move. And another advantage of being short that one is that you're going to have a positive carry. So I do believe that the NOK can overperform the euro, likely in the years ahead. And I do believe that once we see a breakdown from this formation, we might get a very big move in our hands here, especially considering that this is a multi-year formation. Do you think there is a positive divergence on Aussie USD on the weekly chart? Okay, to be honest, I haven't checked for RSI divergences on the weekly, but I will be more than happy to do it now. So clearly, as you see, I've already marked it. Actually, I didn't remember because sometimes I'm drawing mechanically. So yeah, there is clearly a big RSI divergence here dating back to August 2018. So it's more or less as prolonged as the one we have in the VIX. Yeah, we keep seeing lower lows on the weekly in the Aussie, and we keep seeing higher lows in the RSI, and in a very profound way, because that low was actually at 22, which is deep within oversold territory, and the most recent stabilization that we had here was with the RSI being roughly close anyhow to 40. So big divergence, right? So yeah, I do, but the counter argument here is that as this pair has been diverging, has a divergent RSI on the weekly since September of 2018, there is absolutely no reason to believe that it can't keep on having an RSI divergence until this actually plays out on the weekly scale for a few months more to come, right? So I wouldn't be trading it to the upside solely based on a divergence, especially on the weekly RSI, because a divergence on a weekly chart is something that might take a long time to play out. And if you want an example to that, we don't even have to switch tickers, because just by looking at these lows here, August, and September, they also had RSI diverging from that previous low. It did produce a little bit of a rebound, but that didn't stop the pair from, producing a lower low soon after a little rebound. So once again, there is no real guarantee that just a weekly RSI divergence is going to be enough of a reason for the pair to rebound yet. Now, of course, eventually it will have to do so, because nothing moves in a straight line with the exception of US stocks. Speaking of which, and I'll close with that because it's interview time, we had the question about what's happening with the S&P, which reminded me to mention, because it has acted perfectly so far. I've had this Andrews pitchfork on the S&P for years on my chart with its 200% extensions. And as you see, every single time we've tested, especially the 200% extension, or we had a little bit of an overthrow, we've had the market violently snap back one way or the other. So having said that, I need to stress out here that
don't stress out, man.
This this whole rally that started 11 years ago, this is the first time that we actually trade above this 200% extension of the Andrews Pitchfork, and you don't need to be a real expert here to understand that, you know, it makes no sense buying where we currently are. I mean, there has to be at least some type of a mean reversion first if you actually want to be buying this. And a simple mean reversion coming back exactly at the middle of this Andrews Pitchfork, which dates back years, would imply, as we speak,
you need another prong on that pitchfork above it.
Yeah.
How many prongs are on a pitchfork? I thought 3. You already have.
Yeah, okay. I have an extra one, and yet we managed to actually go above it. Yeah.
You have a Greek Andrews Pitchfork. Okay.
So bottom line, be very, very careful here. I know that this market seems, smells, and looks invincible at this moment, but don't forget that, you know, before things blow out, they always look invincible, right, Coach?
Yeah, things always look the best at the top, worse at the bottom. I have a funny story for you. You know, I find a lot of our guests on Twitter, and I invited this one guy, Rudy Haverstein, and he said, "No, thank you, Dale. I appreciate it, but I'm not doing podcasts right now." You know how I responded to him?
No.
I said, "Either do I. I do podcasts, not podcasts." Anyway,
by the way, he's a funny guy. I like him.
Oh, Rudy? Yeah. Okay.
Yeah, on Twitter, I mean, the Twitter account.
Yeah.
Because the real guy is long gone. I mean, even if we tried, I doubt that we would even find any dust left.
Yeah, I was he a famous guy, Rudy Haverstein? Who was it?
Oh, you don't know?
No. I bet Peter Goodburn knows. Not Rudy Giuliani. Okay, there you go. Rudy Haverstein. Lloyd Blankfeins. What?
There you go. President of the Riksbank.
Oh, okay. I see. During wheelbarrow time.
Yep.
Okay.
And that's why he has chosen this profile. If you've read his,
he'd only be 163 right now.
Yeah, it's okay. I mean, yeah.
May you live long.
Yeah, and may you live well, because you know, long life with suffering is nothing anybody wants.
May you live well and destroy currencies. That was his mission. Okay, so
for sure, that's today's central banker's mission, for sure. Yeah.
All right, so Peter Goodburn's with us. Peter, welcome back. I'm going to get you set up now. Stick around for this, guys. Okay, I'm unmuting you, and then Steve will stop sharing his screen. Hiya, Peter.
Great, Dale. Can you hear me?
Yeah, I can hear you. And if you just scroll, welcome back to Face, to a little green box. It's a drop-down menu. You just hover your mouse there, and you'll see a share button that you click, and then we'll see the pictures.
Okay, great. Okay, I think I got that.
You do?
You should be able to see.
Okay, beautiful. Beautiful, buddy. All right, so it's great to have you back. We'll start here, and I want to acknowledge, you know, I read Peter's stuff. He's been bullish for hundreds of handles here, and so why don't you tell us where you think we are? And go ahead.
Good. Well, actually, I forget to some extent what we discussed last time, but I suppose, when was the last time we headed off together? I think it was probably November, wasn't it?
Yeah, and you know, we were talking about, which is something I want to address, you know, the synchronized takeoff with inflation where, part of the narrative was a weaker dollar that was going to drive commodity prices higher. The weak dollar was part of it, and everything was going to be good. It was going to be one of those. And the stock market, despite a stronger dollar, continues to perform. Did that surprise you that the dollar scenario at least shifted or was delayed from being a bear phase to continued strength, and looks like it may want to try the highs, or anyway, that's what I remember from our conversation.
Yeah, good. Yeah, that's good.
And we were all both looking for new lows and yields, and so that's the narrative we were talking about.
No, good. I remember. Well, I mean, a lot of water has gone under the bridge since then, and I'm not surprised that we've seen the dollar sort of hold up. The main reason for that was because I always thought that the dollar would actually top out 2018's correction at a time when we would get the commodities, particularly copper, bottoming out. And I can show you what copper looks like.
Yeah, didn't you think the low was in? Were you surprised at what happened with copper really flushing, and crude is trying to hold major support? Does this delay what we talked about a few months ago until copper and crude get their legs?
No, I think copper, I've had a very strong conviction that copper would actually drop down to about 52.65 somewhere. I can show you this chart here. Here it is. This is going back to August last year. But the main reason for 52.65, which hasn't been hit yet, is because we simply extend this initial downswing, which is the first phase of the correction for what we've classified as intermediate wave 2. And we extend that by 38%. So here we go down to 52.65. And you can do all sorts of different bits and pieces in between there, but it has to be traded. Now, if I show you copper today, this chart I did about a few weeks ago. So actually it was at the beginning of January, just when the market was ready to turn down. And you can see that we're still en route to try and trade down to this 52.65 area here. We're still trying to get down there. We've actually had a very strong move down in January, and there's a bit of a counter trend rally going on at the moment. But I had a target at the time at 63.40. We got to 63.43.
Okay. All right. So it's probably because the copper futures. Let me pull that up. Yeah. That's mainly what I'm used to seeing the prices in.
Oh yeah, I forget you're looking at dollars per pound, aren't you?
Yeah. Okay. So I think it was 252 in that.
Yeah, I mean dollars per pound. If we take 52.65 divided by 2204.6,
be about 220.
About 238 is the target.
Okay. All right. So there's still I just pulled it up on mine. Okay.
Yeah. So that 238 would do about. So this thing is going through a counter trend rally. And I was scratching my head at the beginning of January because we do our annual reports at that time, and they're pretty intensive pieces of work. And I was saying, well, hang on a minute. The dollar looked like it might have topped out in October, and yet copper, what's going to trigger this next decline? Because we still need to look at 52.65. It hasn't traded down there yet.
Okay.
And so we were sort of umming and ahhing about the dollar. Of course, in the last week, it's become obvious what's happened. And it tallies very much nicely with this idea that copper will eventually trade down to this 238, 239 area, or 52.65 in LME terms.
And that's going to be a major inflection point based upon your work for a bull market in copper. And this was just an interruption.
That's right. And it turns out that the dollar index, which broke some resistance levels only 2 days ago.
Yeah.
Over
98.
It's actually signaling this extra run up. So this diagonal pattern, I'll actually mark it up. Let's have a look at it on my. For those that are not familiar with Elliott Wave and its idiosyncrasies and stuff, a diagonal pattern is a 5 pricing event that you get overlap.
Right.
So it goes out like this, and you can measure these patterns. which is, you know, where my speciality is, so that we can actually have some numbers to work with. And if we extend this initial swing up in 2018, so we go up into the August high here, we extend that vertically by 38%. This is where the 154 number comes from. And we can verify that by looking at subdivisions within and measurements within this diagonal. So it does look as if the dollar's going to push on a little bit more. Copper might just finish its counter trend rally in the next week and then start turning down to this 238, 239 level. And that's where I think, as you said, the major inflection points will come from, and we'll get everything turning around at that juncture.
Okay, so this final wave up towards, and I see you also have above it 102.79. Is that a different fib target if we get through par 54?
I don't think that's possible. I left it in there because really for tutorial sort of purposes, where we extend wave A by 61.8 instead of 38. But that's not possible under this configuration. This diagonal has limitations. And the fifth wave should be about the same as the first wave, maybe a little bit more, but not too much more. This would be too high. So that's just really for tutorial. Yeah.
Okay. So, you know, I want to go the euro. It's been under a lot of pressure. And I remember earlier, maybe a few interviews ago, you were looking for about, I don't know, 107.50 if my memory serves me, which is also, I keep bringing it up. There was a gap in the euro down there on the Macron victory on his election. So let's see what you have here, 106.80. See, so that I remember that being a target, and then we had a shift, and now we're, you know, isn't it something, Peter, that sometimes these shifts, and you have to go with them because they could turn out to be correct, but sometimes isn't our original thinking usually the best?
Well, that's absolutely right. You know, you're absolutely right when you say that. Sometimes I draw these long-range forecasts, and then the big problem with Elliott wave is that sometimes you expect a very particular pattern to develop into that sort of original large-scale scenario, and then you get thwarted because you see some slight deviations and you lose confidence. And over the years, this is one of the things that you can practice if you're doing Elliott wave, is really just to stick to your purpose unless there's really significant negation levels, because this was an original downside target. I thought that actually last October we might have hit a low earlier, because sterling dollar, if you remember, hit a major low just a month before October, in September 19. And then we did this really great 5 price swing event to the upside on sterling dollar. Let's have a look at that. And I thought that maybe all the currencies had therefore taken the same signal, but it happens to be not. So there's some elements of divergence where euro has underperformed sterling dollar since September, October 19. Let's have a look
for that to continue? Because EG looks pretty negative to me, but I was wondering if you thought that there might be a time period where the euro begins to revert back to the mean on EG, where, you know, it's really been a bear market move from like 93 all the way down to 84 or so in euro pound. And when the dollar turns, I don't know about you, Peter, but I would prefer, just like in the old days, I would watch the mark against the Swiss. Okay. And I would want the mark to be stronger. And so for a pure bear move in the dollar, and I feel that way now, that for a pure bear move in the dollar, I think euro has to outperform cable. Am I, you know, is that just something I need to forget about my 30-year-old rules and look for euro to have leadership, to have a pure move, a bearish move in the dollar?
No, I would concur with that, because, well, in fact, this chart is euro sterling, and you can see that we've put in a low here. We're coming down a little bit as a retracement now, but I suspect that this is the last fling as the euro drops down to sort of 106 something. Okay. This is going to, I would expect this to hold. I think there's a 5-wave substructure in here, 1465, yeah. But the larger picture, you can see a flat pattern here. I mean, if you're familiar with Elliott wave, you know, you tend to look at sort of 3 down, 3 up, and then 5 down like this. And you've got a sort of a horizontal flat. Well, that's the precursor to something up, I think, like this, where we come up all the way up here.
Okay. Yeah, for one more huge
more push. I think it's actually like this. Yeah. So
okay.
that would
It's
bring sort of. Yeah, that's quite a big move. That is a big move, actually.
And that means that, you want to be buying dips in euro pretty soon, rather, because now people are going, well, the euro's crummy, and the only currency against the dollar I want to buy is, cable, because it's acting so much better than euro. And right at the same time, they're going to have this psychology, things are going to flip on them.
Well, I think the Europeans, the reason why the euro is dropping down is because of PMI manufacturing. It's been really hit hard. It's probably the weakest PMI in the world at the moment. And the main reason for that is purely because of the VW scandal. The car manufacturing industry has collapsed. And looking at just talking around here in Germany, and of course Munich is the center here for BMW as well. I've been talking to sort of guys, and they're saying, well, we don't know what car to buy these days. We don't know whether to junk our diesel engines, because everybody loves diesel here in Germany. Right. We don't know whether to junk our diesel cars, go to petrol because of the emission problem, or whether we should be buying Tesla
EVs,
or some sort of hybrid,
Huh.
So everybody's stuck. They're waiting for something to break. And so, the PMI manufacturing is really downbeat. And it's not that robust in Europe anyway, but that is a big drag.
Okay, does a China slow down based upon coronavirus and the country being shut down, and we really don't know what's going on, getting official numbers. Is it playing into any of your wave counts that you saw coming or are underway? I know I'm not much of a fundamentalist either, but and looking at your wave count in the S&Ps, people that are saying it's a black swan, there's no way there's a black swan based upon your work until the end of 2021, at least the end of 2020, I think you're saying, or 2021, before we enter a generational bear market. So based upon that wave count, it's hard to see that anything too terrible is going to happen between then.
Well,
besides
that's right.
the re-election of Donald Trump. I'm not supposed to be political.
Don't we love Donald? I mean, the thing is that I think the biggest indicator that you can watch for re-China is just copper. So we come back to that same chart.
Okay. Yeah.
And this is telling us, there is a little bit of inherent weakness. We know that the economists have been revising down GDP in China. Previously to this, it was thought to be around 5.5% for 2020, but the economists are pushing it down by 2 or 3% notches because the next quarter is going to be really hard. A friend of mine who's running a business who's importing products from China, he's manufacturing there, importing them into Europe. He said, we've got ships already left before the whole coronavirus broke. They're still on sea at the moment, so we're getting lots of deliveries coming in over the next month. He said the big problem is April, May. He says we've got nothing coming out to fulfill our procurement for April, May. So all the economists are basically cutting down GDP and everything. But actually, there are massive green shoots here arising because we come back to the inflation pop scenario, which we talked about in November and you mentioned earlier, where commodity prices are zooming up. We just need this last little bit of a dollar strength to finish. We need copper just to trade down that little bit longer. Some of the other base metals need to come down a little bit more, lead, zinc, which are very much into the car industry sector as well.
How about, go ahead, Peter.
And then everything's going to go up a lot. Yeah. And the only drag that I've got in the commodities, which seems that, of course, you look copper here, looks as if it's almost reaching its downside target already. But the one commodity that worries me a lot is oil. Yeah, but it's working so far. I mean, let me show you an oil chart. I mean, folks, hang on to your seats because, you don't want to sort of stare and look at this for too long. But this is the weekly oil chart. And I need to get oil prices down below the December 18 level. This is when we were trading here at 42.36. I want to see that in order to complete a corrective downswing from the October 18 high here, 76.90.
Wow.
And if we can see that, in the next couple of months, which I think we can, I think it's working. We've dropped a lot since January. Then we're going to go swoosh like this to the upside. It's going to be massive. It's going to be massive. And, you know, we're looking at, and we're tracking probably.
And you've had this count for a while. I mean, it took a while. It didn't take a while. I mean, you know, the first break we had, but what was happening for the last couple of years in this tight range, I thought we'd be there for a while, but you've had, I know you were looking for under $40 oil. I forgot if this is the same target, but it is pretty much the same count you've had for a year or so, isn't it?
Absolutely. I mean, it hasn't changed at all. And when you go back to, well, let me just, you know, I mean, we can always sort of talk about this over the long term. And it takes a long time for these things to manifest, you know. I mean, 2016 was, of course, a very poignant time. And I'm just pulling up a couple of charts spontaneously from my 2016 archive. This is oil. And I was predicting that this was a huge zigzag coming down and that we would come down to about $25, $60, $26. And then, you know, we could go into record highs. And we hadn't even started this move. I'm just flicking through in my database here. And let's just see where it gets to. Well, here, it looks like it's finished there.
Right.
And eventually, we get to a point where we see this huge, I won't show too much.
Like a super cycle. Yeah.
But here it is. Here's the $26 low. And then you can see it's
wow.
And in order to get up to new record highs, this is wave B of an expanding flat on a very long-term chart. In order to get up there, we've got to get up there in either a zigzag or a double zigzag. Well, you can always determine whether it's going to be a double or a single zigzag by the initial upswing, which occurred here in 2016. As soon as we got to that, we could extend that by 61.8, and then we would get the completion of a single zigzag. And we know that we're heading for higher highs. And that's where we can extrapolate then up to sort of a break above 147. So, yeah, this is a very long-term forecast.
Great look. Yeah, there's going to, so acquiring oil-related assets under $40 oil could really be a nice investment, not a trade, an investment. What your take on gold during this last push up in the dollar, which gold hasn't been that correlated to the dollar because it's held up pretty well with the dollar strength. So what are you thinking here?
Well, gold is very, very complex. And I could talk about gold and silver and its interrelation with platinum for hours. I mean, we don't want to do that. But it has to be said that the big concern that I have is that silver's underperformed. When we got this big swing up in 2018-19, silver underperformed. It hasn't even broken above this high here. Silver was $21 at that time. Silver hasn't broken above. Platinum is looking really bearish to me. And I've got to say,
the only star is palladium.
The only star is palladium, absolutely.
Yeah.
And for me, this is a big concern, gold. For starters, you've got the commitment of traders, next speculative long positioning over 300,000 contracts.
And it looks like you have two drives. So I'm actually looking, I think, for a great short at new highs. I've been talking about it for a few months before I saw your count. But it looks like you would allow maybe a pullback to 1,500 before we go to 1628. Or are we on our way?
I think if it goes to 1628, it's going to do it within the next few weeks.
Okay.
I think if it's going to do that, I don't think it'll come down and then go up. I think if it's going to hit that number, it may not.
What a great look.
We've hit 1611 already.
Yeah.
Look, if I extend this by 61.8, this is how the 1628 number. That is a formidable resistance area.
Yeah.
And if gold cannot get above that area, or perhaps even this 1611 area, you know, I'm not long of gold at all. I don't like it at all.
Okay.
Then I think there's a real risk that this can drop. And the main reason for that is because silver, as I mentioned before, has not been able to really perform. And
it's been the weak sister. I mean, we've already made a few lower highs in silver in comparison. Okay.
And this is a silver chart that really worries me. It's a sort of an alternate count at the moment, but
Yeah.
But it's done nothing to refute it, and you can see that we're still well below the 2016 low, the equivalent level on gold.
Yeah.
Here it's 3 waves up, which is very typical of a first wave in a diagonal, which I've drawn to its completion. So that means that silver could actually have this big drop down to $15 before it goes up again. And that's a concern. That's a very big concern. You need silver to outperform gold.
People won't understand it because it'll be happening with a weak dollar. So they're going to be buying dips in gold and silver all the way down because they'll go, well, now the dollar is weak. Precious metals have to go up.
Well, the big thing that changed, during that 2019, last year's big rally on gold was the fact that fund managers started to get involved for the first time in a serious way. They didn't really manage to pick up let's go back to gold. They didn't really pick up the advance in 2016 because they'd been moving down for 3 or 4 years. And they didn't really pick it up. They only started to pick it up here, and it was for one reason only. Of course, there was the trade war between the US and China.
Right.
The fundamentals weren't looking, good, and they were very reluctant to put money into the stock market. So they started to buy gold, and especially when it broke the 2016 high. So they all started rushing in. Since then, of course, I think Bank of America, Merrill Lynch, they put out their fund manager survey last year in October, November, and they said only at those months had fund managers start to allocate a lot of money back into the stock market. And of course, that drove the stock market forward. And since the stock market has been making repeated higher highs, gold's suddenly fallen dead. I mean, it just can't make any progress because all the money is being driven into the stock market. And until that changes, I don't see why gold should go up, and I don't think it will, because the stock market's very bullish. So let's go back to the S&P one more time and have a look at what's going on there. This is I'll show you a chart which I had when we spoke last. This was around November last year, and you can see that I had this big uptrend still developing up to 34.78 for minor wave 3. This was really a very concise forecast for a continuation of the trend that actually preceded this from December 18. And here's the chart since, and we're up at 33.60 now. We've still got to get higher, and I've raised the targets for minor wave 3 now repeatedly. It's very, very bullish, the stock market. There's no doubt about it. It's got a lot more to do. So why would you buy gold? And I think eventually, as the stock market continues to move up, once we get across this hurdle of the coronavirus, fund managers will then go through a second phase of allocation. I don't see why they would be buying gold. That doesn't make sense to me.
How about a quick look at US dollar yen, which I know long-term you had a very bullish count. Has it begun, or are we going to get one more shakeout?
I think dollar yen looks something like this.
Okay, one more little dip.
I think there could be a little bit of a correction down here because I could see there's a little 5-wave dink down here.
Yeah.
So I'm thinking it could fall back a little bit, but generally this is going to take a look at 121.80. I think.
Okay, and I think that's going to accompany higher yields. Eventually, don't you?
Okay, that's a good point. I don't know.
Okay, that's a valid answer.
Yeah, I don't know. I must admit, I might do a correlation after we've spoken today.
Okay, it ties in with your lower gold forecast.
Okay, yeah, that might be. At the moment, I'm still looking at these yields trading down to a slightly lower low. Let me just show
135 to 125 on the 10.
Yeah.
One. That's the 10.
This is the 10-year.
112.
Yeah.
Wow. Okay.
This is we need a lower low.
Okay.
We picked up this November high last year and said that's a 3-wave correction. We get a 5th wave decline.
Yeah.
The daily chart looks a bit like this.
Okay.
Wow. So we need to get down. We need to break this low. If you look at the 30-year yield, you'll see that where are we? Yields 30-year. Here we go. This is the 30-year yield on a weekly basis, and got targets of 160.
Okay. That's 30 bips under the recent low. Okay,
Yeah.
so, I want to wrap it here with something that you've been spot on for a while. I got long Bitcoin assets January of last year based upon your bottoming call. And then the retracement we had to about $6,000 or so was a buying opportunity in your work, and you nailed that too. So you've been there for major turns in Bitcoin since I started following your Bitcoin work a year and a half or so ago, and that's when you just started covering it. So great calls, Peter.
Thanks, Dale.
Yeah, it was a 3,100, and then you saw the pullback from 13.8, pulling back for a 2 or a C or whatever.
Yeah,
nice.
Exactly. Well, we got a really nice call back in December to start buying this thing. I have to admit that we haven't seen any price expansion. It's been a topic for some of our clients recently, because during this advance, we've seen very little progress to the upside. And it concerned a couple of our clients. And they said, well, can you put in an alternative scenario? This is it here. And we sort of said, well, okay, if this gets up to about just above 10,000 and it starts to stall and doesn't continue up, it could drop down here and extend this correction.
Okay, I'm going to be using my magnet on my screen, looking for your alternate count, so I could buy more down there. So I just use a magnet on the on the candle, and I drag the market in the direction I want it to go.
Okay, good. It's funny. It sometimes works.
You have to have 100 people doing it at the same time. Go ahead, Peter.
No, it's funny. It's funny because sometimes if you look at something hard enough, it actually happens before your eyes. But anyway, that's an interesting subject for another time. Okay. I'm not bearish like that. I did that alternate count because I had some very worried clients that we hadn't seen price expansion, which is defining a third wave in here. And it's still, I must admit, it's still looking rather tentative. We've been long. I have to say that some of the clients have squared off, but I would probably have a trailing stop in here, and you can put it below any one of these recent corrections like here. This is, I know it's quite huge, and it's very volatile, but if you're not leveraged, and you should really try and stay long, try and give it an opportunity to continue trading higher.
Okay. Great calls, Peter. All right, so I can answer this question. Someone's saying, those counts, is it automatic from your software, or do you do the job, Peter? Isn't the answer both, because you program things?
I see. Well, actually, most of the charts that you've seen today during the session are actually manually drawn. And I have about 700 worksheets. These are our production charts, which we publish in our reports. But all of the work goes on in the background, and we do all the measurements. This particular software is quite good because we can manipulate the data. We're using some log scale bid price ratios. And if you want to pick up on some of the ratios that we've applied and that we use, they're not standard, I say, in the industry, but they've worked for us over the last 25 years plus. And you can always subscribe to one of our reports.
Why don't you show your website, Peter, where people can follow you? And
thanks, Dale. This is wavetrack.com, and if you go into this, and you can actually go into the registration and subscription area, and you can subscribe to our bi-weekly report. It goes out twice a week. It's $39 a month, so it's not going to kill you. And it's got tons of information there. And not only is the current forecast, short-term forecast in there, but we do a lot of tutorial explaining how these ratios are formed. And certainly our subscribers over the last several years have said they learn a lot from these reports. So it's a double whammy. You get some forecasts that are tradable, and you can also learn from some stuff as well. So do have a look at that. The actual sort of what it looks like is this report, but we've also got online where you can download this report and you can see them online as well, all the forecasts. So if anybody's interested, do take a look because it's very informative.
Thank you, Peter. I thank you for coming in here, and every time you're here, something gets crystallized for me. And I know if it happens for me, it's happening to those that are listening now or see the video later. Great stuff, Peter. Thank you, my trading warrior brother. I hope 2020 is your best year ever in every way.
Great, Dale. I really appreciate the opportunity to chat with you today. I know we should do it more often, but just a great pleasure. You're a great example for us to work through for the industry, and I admire you a lot. So thanks again. Appreciate it.
Okay, it's with the greatest pride, Peter, I'd like to announce how you've humbled me. Good try, man. All right, everyone. That's a wrap for today. See everyone tomorrow, TGIF. Thanks again, Peter. I'll see you guys. Remember, don't just count your pips, count your blessings, and have a great day. Thanks, Pete.